Good morning. Today is December 8th, Tuesday, 2015. Looking at the ESZ5, the EZ. How about that? The ESZ5 Z5 December contract, which will expire soon. The E-mini SP 500 monthly chart, pit session time frames, and on the monthly, very simple. We're one time framing up, but we're in balance, and it's an inside month thus far. Um, Yesterday we closed back up in the top of this monthly range, but we are now have in the overnight moved down to the lower half. Um, let's look at the weekly. And once again, the way things are right now in balance, we aren't going to get the best information until we get down to the nitty gritty. On our weekly chart, we are in balance. We've tested the lows of this balance area and have been, last week we were kicked way back up here. Again, we're still in balance, and we've got a hammer formation right now in the weekly. It's only Tuesday. We've got a hammer. It's pretty much meaningless because it's not at the bottom of a downtrend per se. And once again, we are in balance, having tested the lows. That's really all there's to say. And we're back down on the lows. Now, what's significant though is a level that may be in play today is the 50 moving average, weekly moving average of 46.25, and it may be a level that short-term traders trade off of. Something I've noticed when we look at the daily chart, I'll see the same thing. For example, we traded through that level yesterday. I believe it was yesterday. Yeah, it was just no wait, last week we traded through it, but we may retest it and this time bounce on it. So like it penetrated the first time, next time it comes down, it seems to have congealed, short up or something. I've just noticed this at times, that the market will do things like that. For example, we opened, and this candle right here came down and looked back inside this balance area, and this the next time it came down, didn't quite make it. Maybe that's not the best example, but there's other examples. If I see one, I'll mention it again. Okay. On the daily, I think one of the things I need to do is go back through our Russian dolls of balance areas because they are back in play, and the dynamics of what's really going on here. Okay, so yesterday you can see that when we opened, we traded down outside of this range, and looked inside of this range, and then it rallied. It got too short, so it was rejected back out of here. Okay, so we roared back up and closed back up inside of this balance area, which typically would mean that the destination now is going to be to test the top. Now, remember the last time we tested the top, we came exactly to the high. We didn't look above it any amount and come back in. We just touched the top and went straight back down, and then kept going down, and then it, like a rubber band, it snapped back up inside of here. However, this morning we're far below yesterday's low by almost 10 handles, so it's a pretty good gap down. We haven't taken out Friday's low yet, but that's on the horizon. And what's important though is that we're back inside of this trading range, and I don't know if we'll find acceptance or not, but if we start to find acceptance, value will be lower. We want to look to a move to the bottom of this trading range, which this brings that 54 level into play. If we can take it out and take out Friday's low, that's very bearish, and this is another level. Okay, remember the 46.25 is the 50 weekly moving average, but we may stop on this daily 200. We might find support there. As long as we're above this, it's somewhat bullish. 200 moving average, that's sort of a divider of bullishness or bearishness, but I'm looking at it more as dynamic support. It's also the 61.8% retracement from this move here back on the 16th of November, and that's confluent, very close to the 50 daily moving average at 43, and the 50 weekly moving average at 46.25. Actually, it's almost. Actually, let me round this off. My numbers need to be fixed here. All right, at 43.75 is a better way to describe that level of the 50 moving average. So the way this 50 is coming up very sharply, I would not expect that we'll penetrate it unless there's some exogenous event. So I'm looking at this as sort of a buying area between 43.75 and 49. Looks like 49.75. Let me put this level on here just a moment. Oh, that's actually on here in the blue. 48.50. Now the 200 moving average is slight. I am going to call that 49.75. So, or we can say 20.50. Probably a round number is probably better. So let's say from 43.75 to 50. About 6.25 points. There's a good chance we might find a low there today if we do trade down there. And then if we get back up inside this 54 range, again, that's going to be rejection off of that. Or come back into Friday's range. That might be an area to buy. I'm kind of mixing in. I haven't got to the profiles yet, but this is a critical area we're threatening to explore. We're going to probe it. I don't know what happened in Europe or how thin it is. I know the European markets are down. Will we get a correction? I don't know. We're gapping pretty far, so we may have a failed attempt to close the gap, and then again that would be a place to short. So, or well, not a place to short, but an indication to get short at the when you can. And another factor to consider below 56.50. Yesterday in the daily, I was using 78.6 retracement from Wednesday to Thursday's low. Wait a minute, let me think. Yeah, Wednesday to Thursday's low as a level to where we're either that was going to be our first barometer of whether we're bullish or bearish. So for me, the first barometer of whether we're bullish or bearish, we're bearish because we're gapping. But I believe this 56.50 is, if we come back below it, that's definitely bearish, because I imagine there'll be some attempt to fill the gap. There might be some attempt to fill the gap. But I'd watch that 56.50 level is what I'm trying to say. Okay, so probably better now to look at the profiles. But I think really at this point, though, these areas like this trading range here, 54, again, it's a level to have marked, 56.50. And these are bearish, and this is our zone. 56.50 to 54 is below that, definitely bearish to at least 20.49.75, possibly down to 43.75. Now, if it gets through that, wow, we probably are having a trend day down, and I don't know where that'll end up, but maybe down to 35 or 33.75ish, because that would be the 76.8 level from the pullback from this low to this high, so that's possible. Yeah, anything below 48.50, that's even more bearish, but we really have a critical level at 43.75. So that's a zone, possible buy zone, possible turnaround point, the lows of the day. But below that, it's bearish again. Of course, we got the weekly low to get through. All right, so there's a lot of levels. Ever since Friday, we've ended up in areas that are very level rich, and I try to simplify it by creating like a connecting the two levels, making like a zone. But just got to take it one step at a time. The most for me, the best barometers are these balance areas. So this trading range here, which I've defined as the low is 54. If we test that and can't take it out, which would also mean we aren't taking out Friday's low, then we're looking to turn around. So I'd watch for that. But we're so close. I don't know. Depends if they close the gap. Of course, if they close the gap, we want to get. Let's go to profiles now. That's the best thing. All right. So we're trading down here 56.50. I'm going to have to free up some from reference lines to put my lines in the chart. But remember, 54 is one of them. 56.50, where we are right now, is one of them. That's the 23.6% that I talked about as one of our barometers. So let me actually reset the low here. We should see our overnight low fall down. Yep. All right. So it's at 55.50. So if we do come back and close the gap, we want to get value to unchanged, which I don't think will be very hard because the value area is down here in the lower part of the range. And we've got a naked, very prominent POC that could be retested. But if we can't get value to unchanged, then we will look for a later liquidation in the later morning or early afternoon. So run my pen here. Okay, so again, if we come back in, get back into the value area, likely we will test this VPOC. If we can't get to this POC, that's even more bearish. But if we get in here and we can't get our value to unchanged, then we look to be. All right, my pen has stopped. Okay. Yeah, every once in a while it freezes up like that. I don't like that at all. I'm gonna get my pen going again here. So, if we get in here, we may get a couple periods. We might test this one. We might just test right here. But if we get some rotation, but we still have, and I'm going to make this like our value area. Let's say our value area is still like this. This is going to be today's value area. Look for us to be getting kicked out later. Have a liquidation. So that's one thing to watch for. But we may not close the gap at all, or just touch the. It would help to look at market internals for this, but we might just come up here and just barely close it and then fall back down. Or again, we could just gap and go. Okay, and then again, 54 is an important level, 56.50. So this is like a zone of whether we're bearish or bullish. But overall, right now, gap is bearish. So that's the overriding theme, and depending how it opens and closes. But you know what? By the time you see the video, because it's still got a process, it's going to be open, and we'll already have that answer. That's okay. It's good to let things